Hey guys, welcome back to my YouTube channel. So today I'm going to go a bit through the market and sort of give you an update on the stocks that I mentioned in the last few videos. So today, just because I don't know exactly when I'll be releasing this, but today is the 7th of January. So the markets are having a great day today. You can see all the major indices are up close to 1%, so they're doing quite well. And we've had the S&P now retrace nearly, I think, 10% from its lows. So a quick look. Yep, just about pretty much 10%. So that's quite good for obviously investors into the new year. Does this imply that the bear market is done? I wouldn't think so. Like I mentioned in my last video, obviously the jobs number was great. The non-farm payrolls was great for the month of November and December. So that is something that has given more optimism in the economy, but that doesn't necessarily mean that the bear market is over. As you can see, certain movements that we've had in the past as well, around 7-8% gains. So you need to be a little bit cautious. And obviously, it is the start of January, which means obviously naturally pension funds and sort of money managers are pouring back into the market because there are good valuations around. But that doesn't, needless to say, that doesn't mean that the bear market is over as such. So the S&P is having a good run today. Nasdaq's also getting a good bid. Tesla is actually up as well a fair bit today, and the reason being is because it was announced that they opened their factory in China today. So it's up about 4%. So that's obviously quite optimistic news for Tesla. So in terms of hopefully they can meet their production targets. So obviously that's having a bit of a bid today. But something I want to move on to first is ASOS. I mentioned this, I think, in my last video about why this stock was a great buy, and I mentioned it before the open of today, and the stock had a gain of about 13% today. So I don't know if by the time you guys see this video whether or not it could buy at that point or not, but the idea was, as I mentioned in the last video, obviously because of the valuation you was getting on ASOS, you could have played a great hedge by longing ASOS and shorting Boohoo, because ASOS is trading about, or was trading about 1 times revenue, and ASOS is still trading at roughly two times revenue, I believe it is, or 3 times actually. But I'm sort of forecasting what they will probably make this year, so that will make it about 1.5 times or 2 times. So yeah, Boohoo's also having a little bit of a bid today. That being said, I'm going to get quite short Boohoo, probably closer to the earnings, and sort of ride it out, even if it does go up straight after the earnings. So yeah, that's also doing fairly good today. And sort of moving on a little bit to the biggest hot sensation that everyone's been talking about, and that's Bird Box, the movie that got released obviously on Netflix. Obviously it was a small budget movie. It was only about 20 million, which by Hollywood standard is pretty small budget, but it's managed to do really well, and that's giving a lot of traction to obviously Netflix because it's on Netflix. So that's pushed up Netflix, or would push up Netflix quite a lot in terms of the customers that are using it, that are getting on, that are spending time on Netflix, which is obviously great for Netflix. And you can see that reflected sort of in the share price today. Obviously today the market is up as well, so you could obviously argue that it could be just up because of the market, which could be true and probably is true, but the idea being Netflix is is that it has good opportunity to run, and is a stock probably to look at, whether or not they could be a good buy, obviously after the decline that we did have. Obviously we have now recovered a fair bit of those gains, but let's just see what price are we at now. So we're roughly 25% from its peak, and we had bottomed around 45%. So obviously it has jumped up quite a lot from its drawdown. Let's see what percentage that was. That was about, oh wow, it's gained around 35% in less than a month, or in fact 2 weeks. So obviously Netflix is something that you might want to look into. Still, obviously down 25% from its highs. Whether or not it's a good buy, personally, I'm not getting into it at the moment. I know that they have good scope and good future, especially with the Bird Box. Is definitely great news for Netflix to get more attraction to them. But looking at Netflix in terms of their financials, they actually trade quite heavily times their revenue. I think they make revenues of about 10 billion a year, and their market cap is around, let's see what their market cap is, about 160 billion. So it's over 12, 13 times. But they are growing, so it could be a stock to look at and potentially get into. I'm obviously waiting a little bit longer, just waiting for maybe potentially another crash. I actually am using this opportunity to get more into shorts, top up into my shorts, and actually get long the VIX, because February, as historically, is a very volatile month. So I'm expecting the next couple of weeks for the equity market to be really, really good. We've had good gains on the S&P 500. I think we could probably top out at 15% gain from its low. So I'll definitely be someone who's going to be topping up on the VIX. I don't like to get short the market because obviously it can quite easily wipe you out. But yeah, I don't think we'll get over 15% gain in the S&P. We're up 10%, so if we get 50% from its lows, that is feasible. But yeah, it'll be a good time to sort of be cautious now. Probably get out of your longs or start to slowly cash out by the end of January, and then see what February holds for you, because it will probably give a lot of trading opportunity and potentially more investments later on. Thank you for watching this video, and I'll see you guys in the next one. Bye.